it's turning out to be a fabulous Friday for the Indian markets. We have not only touched the record high levels, we are now inching towards that 24,600 mark. So great going for the Indian markets at this point of time. Nifty, as I said, very close to that 24,600. The Bank Nifty chugging along nicely, and of course the broader markets too participating. What's clearly leading the rally today is the IT pack. So of course that IT index is up 3.5%, but it's the biggest single session gain that we have seen in TCS in the last 4 years, I believe. So that stock is now sitting with a gain of a solid 7%. This when they have not delivered per se a big beat when it comes to the margins or profitability. Yes, the revenue growth has been better than expectation, but the management is still on the back foot when it comes to calling out growth. FY25 is going to be better than FY24, they say, but still not calling a turnaround or a bottom, or the fact that they are on the growth path. Despite not saying any of that, the stock is up 7%. I wonder what would have happened if they would have acknowledged that we have turned the corner as far as IT services go. TCS clearly seeing heavy amounts of volume, and of course the fact that the stock had underperformed a bit going into earnings is also playing a part here. But Wipro as well, Wipro is also up 6%, but in the meantime we are watching out for what's happening with Adani Ports. Listen into the conversation with Karan Adani.
It is a historic day, I think not just for Kerala but for India, because as you know that India has always moved their cargo to other transshipment hubs, whether it's Colombo, Jebel Ali and or Singapore, and today we are able to proudly say that India has its own transshipment port, and Indian cargo can get transshipped and get hub. There can be a hub and spoke model for Indian cargo owners in India, and more importantly, this will help in terms of improving the cost of logistics for our importers and exporters, and make manufacturing much more competitive, not just in the regional scale but at a global scale as well. And that's what we are working towards, and that's what we are aspiring towards.
Also, you mentioned about in your speech that phases 4 will be completed till. Can you tell us the whole phase timeline and how much will it be invested in the future?
Sure. So we've just completed. We'll be completing phase 1 by October of this year, and we've got our public hearing cleared successfully, and for the whole master plan. And once we get the approval, our target is by 2028-29. We would complete the full phase. So from the current 800 meters of berth length that we have, we would build another 1.2 kilometers of berth length, from the current capacity of 1 million TEUs, taking it up to almost 5 million TEUs by 28-29. And we would look at approximately 20,000 crores as the additional investment required to complete the full master plan.
Also, alongside with this, the Maritime 2030 plan, are you planning any expansions, any other ports you're getting into?
No. So as you know, we operate almost 14 ports within the country, and we have enough space. We have the clearances, space, waterfront, backup yard, as well as connectivity to expand. So we will keep expanding in these current locations that we have. And as you know that we have a target of almost 1 billion ton of handling by 2030, and so we are very confident that as country moves towards the $5 trillion economy, the trade will be the big backbone of that growth engine, and we are hopeful that we would be one of the players to drive that growth.
Definitely, this is a very big historic growth, as you said. Also, just mention of some of the challenges you went through, especially with this port. How did you make it out of it? And we are here today at the historic day.
No, it was one of the most challenging port, if I may, greenfield. From a technical perspective, one of the most challenging. So the breakwater that you see, 3 kilometers long, 30 meters of depth, as well as 120 meters in terms of width that we have to do. Just to give things in perspective, 120 meters is basically one football field of width that we had to put, and 3 kilometers is the largest breakwater in the country. We had to get rocks of almost 80 lakh tons. And that was one of the most challenging part, getting approvals, getting the material that was required, without affecting the local environment and without affecting the local community. It was one of the most challenging part, but it took time. We had multiple challenges. We had R&R issues. We had cyclones, two cyclones which came and passed through this port. But eventually, team worked hard, and we perceived, and we are here.
Absolutely, teamwork plays a very significant part. My last question to you will be, like, Adani ports, what will they have the strategical plans? What will they do for the future Maritime Amrit Kal 2047 PM's message?
So one of the big things that we are now working towards as APSEZ is improving our hinterland connectivity. One of the big things that we see an opportunity is improving the infrastructure on the inland side. So whether it is warehousing, ICDs, last mile connectivity, whether it's trucking, and that's what we are looking at, connecting and giving a end-to-end solution to our customers. More importantly, apart from building the infrastructure, putting a technology layer on top of that infrastructure so that there is seamless visibility, not just for operations but even to our customers and all the stakeholders. So we keep reducing the transit time and all the leakages which are happening along the way.
Okay, let's now discuss the prospects of the market right now. We've got Anshul Sehgal, Kunal Bothra, Naresh Mirani joining in on the show right now. And Kunal, after that quiet start, what a move it's been. Let's first address what the charts are looking like.
Yeah, for the indices, it's been a good day. Almost 250 points plus for the Nifty and the Bank Nifty. And the good part is that the IT index has managed to make a very strong comeback. We are just 200 points away from the for the IT index to make a fresh lifetime high, breaking past, I think, 39,400, 450 approximately is the previous highs for the IT index. So we're just about a few points away for the IT index. But I think, it's a show of large cap names which have been doing pretty well for the IT pack. There's been good short covering which we've seen for the first time, I think, in the likes of HDFC Bank today. And in the first half of the day, we saw good recovery in the likes of Axis Bank and ICICI Bank. These stocks, they managed to make a fresh swing breakout, new high for themselves on the short-term chart. So I would probably believe that we could now be at a point where the index trends could continue to be positive if the large cap stocks continue to move up higher.
Okay, point taken. But talking about the IT stocks, so not just the frontline index, the frontline stocks, even a Sonata Software is up 10%. Remember that stock had seen an initiation this morning as well. Plus ISG had talked about how Sonata Software has got back into the $1 billion club. So that stock is up a solid 10%. You have Coforge higher by 8%, KPIT Tech doing quite well. And of course, Zensar Tech, Infosys. These are some of the names which are in the spotlight on account of all of this. Anshul, is the street making too much of the earnings from TCS? Or do you think this was long overdue?
Hi, Anisha. As regards the IT space in general and TCS numbers, clearly the numbers were a slight beat over street expectations. Since 2021 December, this sector has consolidated by and large, particularly for the large caps. Even for this frontline name, if you look at the stock price, you will notice that it is about the same level that it was at till about 2.5 years back. So clearly, there has been significant consolidation in this space. And the street was looking for a sliver of positivity, which came through in this quarter. As also, there is some indication in the US that there will be there will be a benign interest rate environment going forward, which will be good for industry over there. And that translates into growth for Indian IT. And take all of this together, it looks like this is really what the street was looking for, and TCS has given a spark to the fire. I think that at least in the near term, there will be expectations built that the sector will have tailwinds.
Okay, in fact, on that note, listen into the management of TCS itself. They are talking about FY25 being better than FY24, but not calling out the bottom as of now. As far as TCS is concerned, AI pipeline is swelling up for them. $1.5 billion is what it is at, and the headcount growth this time around was also quite solid. Hear out the TCS management.
The good news for us is all the industry verticals have grown. and almost all industry verticals and all geographies have grown. That's the first positive sign we want to look at. And we are also seeing from the growth perspective, it is both kind of projects. We are seeing good growth in discretionary project as well as in the, when I say growth, in the cost optimization, definitely there's a growth. Discretionary project is a status quo. So overall, we are in a happy situation with the results that we have got. We have said that we believe FY25 will be a better year than FY24. We stick to that stand. We are not confident enough to call that the market sentiment has changed for good at this. If you look at the pipeline, both our overall pipeline and qualified pipeline, they stay at a very healthy level, more or less near the historical peak. So, and we announced a $12 billion plus order book last year. Even after that, we have been able to replenish all of them. So it's a slightly, and we also said our comfort range is 7 to 9 when you take out all those mega deals. This time there is no mega deal, so it's within the range, and it's a timing issue. There are few large projects we are working on, like which could have been signed this quarter, maybe might have slipped by a few weeks to this quarter, come a Q2. So we don't see any issue there. Like order book is quite healthy, pipeline is healthy. What we see closing in Q2 is healthy. So yes.
Right. Well, the big event today, other than the markets, has really been Anant Ambani and Radhika Merchant's wedding this evening, as they're all set to tie the knot at the Geo World Convention Center in Bandra Kurla Complex today. The star-studded ceremony will be attended by nearly a dozen former presidents, prime ministers, top global CEOs and celebrities from the likes of UK Prime Minister Boris Johnson, US Secretary of State Hillary Clinton, the Kardashian sisters, and as we can see, a lot of celebrities have been arriving. Telecom tycoon Sunil Bharti Mittal, Sachin Tendulkar, and former UK Prime Minister Tony Blair as well.
Welcome back. Well, for the market, it is all about IT. You can't take your eyes off the 5% move that we are seeing on an intraday basis on the Nifty IT index. I'm not talking about one stock, it's the entire IT index which is up 5%. And in fact, the Nifty IT index constituents itself today have added the market capitalization of a whopping 1.5 lakh crore rupees. So that's the kind of big build up that we have seen on IT sectors today, and it's all because the big beat coming in with respect to TCS in terms of the top line, and the fact that there were indications that verticals like BFSI, North America, high tech have managed to report a meager amount of growth, or at least are on the trajectory of growth, and all of that has set fire within the entire IT pack. What else is active in the trading session today? It's very difficult to call out any other name apart from IT, because in your list, the top 10-20 names are all coming in either from IT or the other vertical which is in focus is railways. So Railtel Corp is up 15%, RITES is up 8%, Ircon International is doing quite well. In fact, we will get Jinesh shortly to talk to us about the railway stocks as well and how some of them are poised. But Anshul, let me first take it across to you and ask you, these stocks have seen a massive rally. Is there still money to be made, and is there still a fundamental reason one would look at buying these stocks?
Anisha, I remember just prior to COVID, we were buyers of one railway company in our portfolios. And at that time, that stock used to trade at a price of around 20 rupees. and it had an EPS of 4 rupees. It had a dividend of 2 rupees. And with a market capitalization, which was, half of the market capitalization was cash. Revenues were 10,000 crores, and the company had an order book of 70,000 crores, which meant that 7 years' revenues were already in the order book. These were the valuations at which this company was trading, and you could have hit a dart and picked a stock in this space, and it would be trading at 2, 3 times, 4 times price to earnings. From there to today, these stocks are trading at 50 times, 55 times price to earnings. That stock itself is up 35 times, nearly. And other stocks are up around similar sort of anywhere from 5 to 15 times. Having seen this sort of a rally and seen a multiple expansion of the order that we have seen in this space, while the space has significant tailwinds on demand and there is also excitement in terms of the opportunity, but most of that is already in the price. One has to be extra cautious in this space at this time, is our judgment, because risk reward is clearly not favorable at this time. There is a lot of excitement around what the opportunity is, and which is why you are seeing at higher levels more and more people coming in and buying. But it is precisely in such high bullish times that you see seeds of bearish times ahead, and which is why I would be cautious on this space going forward.
Right, okay, that's the take coming in some of the railway names. Today, of course, it's IT all the way, be it an Infosys, which is now sitting at a tear of about 6.5%, Coforge higher by 8%, or for that matter, Wipro, which is also higher by 5.5%. Naresh, how sustainable does the move in IT look to you?
So we've just seen one result. So now going forward, it would be selectively on one by one different results will give a move, but the structure is very clear. We've hit a new all-time high almost on the index itself. So that clearly tells you the structure. And the bias is now positive. So for now, even if we unless we get some terrible results, we may not see a lot of downfall and it will become a buy on dips for the whole sector as such. And mind you, the sector has gone through a 3-year phase of consolidation after topping out in 2021. The index did not come back to those same prices, and many stocks are still down 20-30% from those tops. And at the same time, there are names like KPIT Tech or Zensa Tech selectively, which have continued to do well. So for now, it's time to look at the ones which have fallen 20-25% from 2021 levels. Those could play a catch up going forward.
So those are the views coming in on the IT sector, and for now, of course, all of these stocks are in focus. But oil and gas space, that too has seen quite a bit of activity over the last couple of trading sessions. Oil India, after that 10 to 11% move yesterday, opened with a gap up today. Right now, also the stock is up 6%. Morgan Stanley had, of course, upgraded the target price on the stock quite meaningfully. I think 660 thereabouts is the new target price on that one. Plus, of course, the commentary coming in from Mr. H.S. Puri, the minister, as well, about the $10 billion investment expected in the exploration and production of these. Quickly, Kunal, on Oil India, what's the view? Even ONGC and other stocks for that matter. And then we did speak with an analyst. We'll play that soundbite as well as to his view on Oil India. But Kunal, you go first.
So yeah, I think ONGC is something which is looking attractive. That's a chart which I think has done pretty well for itself over the last few days, where the stock has moved from 270, 275 to now 310 or 310, 312 levels for itself. So the momentum seems to be quite strong. Oil India, of course, is a very similar kind of a chart. The last 2 days, we've seen the stock showing signs of a good price volume breakout. My expectation is that after this kind of an upward move, the supports for Oil India has moved up higher. So earlier the supports, which is on the 50-day moving average, was around the 450 mark for the stock. That has now moved higher to 500 levels for the stocks, which means any kind of a dip closer to 540, 550 levels would probably attract more risk reward traders to enter into the stock.
Oh, right. Okay. In fact, since we're on the subject, let's also hear it out from Swarnendu Bhushan, who is the co-head institutional equities at PL. He expects Oil India to outperform, and that outperformance is going to be more than ONGC, is what he claims, in the next few years.
The reason why Oil India has been jumping much sharper than ONGC is primarily because of the volume growth that it has been showing. So April to May data also, if you see, Oil India has given 6% volume growth in oil and almost 9% volume growth in gas production. And it is guiding that it will be raising its crude oil production from 3.4 million ton to 4 plus million ton by FY26, as well as gas production, although it is guiding that it will be raising from 3.2 BCM to 5 plus BCM in FY26. But we have a little bit moderate expectation on the gas front. But nonetheless, over next 2-3 years, you will see that continuously Oil India will be giving you a sharper production growth in both oil and gas compared to ONGC, where we have seen that although they commenced the production from KG-DWA 98/2, but we saw that crude oil and gas production both are falling. Even in April and May data, if you see, they have registered 2.5% decline in crude oil production and almost 5% decline in gas production Y-on-Y.
Right, okay, that's the take coming in on Oil India. The fact that, it's going to outperform even the likes of ONGC. That's the view coming in from the house of Prabhudas Leeladhar. But we were just chatting about railway stocks and, there's been a lot of buzz around the increased allocation perhaps in the upcoming railway budget for railways. My colleague Jinay is here to give us a breakdown of what really is happening across the railway stocks right now.
Well, yes, so railways has been a clear focus by the governments for many past budgets. If you look at the budget trends for railway over the last 5 years, it has been growing with a CAGR of about 9.8%, right from increasing 1.6 lakh crores in FY 2021 to increasing about 2.55 lakhs in the interim budgets of FY 2025. Now, if you look at segmental expenditure of this budget, you'll find that 1 year increases from the budget is coming in from bridge works, tunnel works and approaches by about 66%. The road over and under bridges have increased by about 29% and road safety works have increased by more than 28%. Also for new lines it has increased about 13% and rolling stock it has increased by about 12%. Now Ashwini Vaishnaw, who's the Union Minister of Railway, recently announced a significant boost to the country's rail network. The first is that production of about 2,500 new passenger trains have begun, and second is additional more 10,000 coaches have been approved. Third is about 5,300 kilometers of rail net tracks were added about last year, and this year more than 800 kilometers have been added so far. Fourth is production of 50 more Amrit Bharat trains have begun, and fifth is railways targeting about 4,500 rail route to add under Kavach this year itself. Moving on, budget is coming up. Let's look at some of the 3 announcements likely to be announced in this budget. First, we'll see an increased budgetary allocation for railways coming in at around 2.8 lakh to 2.95 lakh crores. Second is on Kavach front. Railway is expecting to float a tender of about 3,000 kilometers in FY 2024 to FY 2025. And third is Railway's focus is on massive transformation for passenger rail transport. They are aiming to run about 250 Amrit Bharat trains over the next 5 to 7 years. And also don't forget that trials for first version of Vande Bharat trains are expected before 15th of August.
Right, okay, that's the take coming in on railway stocks, what's likely from the railway budget and what the trend has been in the past. But let's get in some closing trades as well on that note. Kunal?
So Wipro is something which I initiated in the morning, expecting the stock to do pretty well for itself. So far it's done quite okay. 560, 562 is where it's trading right now. So would continue to be bullish on the stock with an expected target near to 580 to 600 levels.
Right, Naresh, what about your closing strategies?
So that would be buy on Reliance Industries. The stock is again testing the highs made of 3220 roughly a few days back. So a pendant formation here, once it breaks 3220, could see a move to 3260, 3300. So buy here with a stop loss at 3190.
Okay, let's take a very quick break on that note. But Anshul, thank you for joining in this Friday afternoon. Good to have you on the show as always. We'll take a very quick break. Carry on tracking markets on the other side. Back with closing trades right here on ET Now. Mesmerized by the move in IT. Now TCS is scaling higher by nearly 7%. Coforge is higher by nearly 8%. Infosys up over 6%. Birla Soft up 5.5%, Wipro higher by about almost 5% or so, Infosys higher by 3.5%. But moving away from the IT pack, in the run-up to the union budget, we've got yet another exclusive story. And our sources are telling us that the government will be extending interest equalization for exporters for 3 to 5 years. Prakash Priyadarshini, my colleague, is here with more details.
Yes, we are learning from our sources that the government is likely to provide some relief to the exporters in the upcoming budget. We are given to understand that the benefit of interest equalization scheme is likely to be extended for another 3 to 5 years. This scheme has already been expired on June 30, 2024. Therefore, the recommendation has been made by the nodal ministry to the finance ministry, and the sources are informing that the benefit of interest equalization is likely to be extended. Along with that, the exporters classified under MSME category would be given a benefit of extra interest subvention under this scheme. So these are the proposals which have been submitted by the nodal ministry to the finance ministry, and the relief measures are likely to be announced to achieve $2 trillion export target by the year 2030. In addition to that, we have also been informed that some announcements are likely to be made to provide relief to the startups as well. Sources are informing that the allocation under seed funding scheme is likely to be increased beyond rupees 945 crore. So these are the specific recommendations which have been made by the nodal ministry, and we are expecting that some of these recommendations are going to be reflected in the forthcoming union budget.
Okay, so incentives coming in for exporters as well. Thanks so much, Prakash, for that. But time now to take it across to Ansh to get the big price volume buzzers. And Ansh, my guess is a lot of those stocks will be coming in from the IT vertical today, given the fact the breakouts most of the names are seeing today.
Yes, today our focus is on IT index only. Actually, Nifty IT index stocks have added over 1.5 lakh crore of market cap today, out of which 1 lakh is from TCS itself. But if we talk about specifically of Nifty IT index, the index has given a breakout from its 8-session consolidation pattern and has registered its biggest single session gain in over 6 months. If we talk about TCS, then TCS has given a breakout from its horizontal resistance zone, registering biggest single session gain since October of 2020. With good volume of over 5 times its average trading volume of last 20 session, indicating very strong participation in today's breakout. Infosys will also be in focus as the stock has surpassed above its key pivot high, hitting 4-month high with volume of over 2 times its average trading volume of last 20 sessions. Infosys is also in focus as the stock has given a breakout from its 6-session consolidation pattern, hitting 5-month high. So even this stock is showing good positivity. Apart from this breakout stocks, there are high chances of GMR Infra getting into ban list. So keep an eye on these stocks.
Okay, we'll watch out for some of those names. So that's the view coming in. IT index clearly seeing a massive rally, 5% higher. The last time we had seen a 5% intraday move was in January this year, but TCS had seen this bigger move of almost 7% almost 4 years ago. So it's been a while for that. HCL Tech, of course, has also seen a block deal, and this is coming just ahead of earnings. Because remember, this time around, we're expecting a decline for HCL Tech to the tune of around 2%, given it's a seasonally weak quarter, and the last quarter is the one which is the best for the company. So we are expecting a bit of slowdown there, but the street clearly is looking at better numbers from perhaps the company, and that's why we are seeing that kind of uptick. But separately for the markets, we are watching out for what is happening to the Nifty itself. Great amount of momentum there. And of course, on the losing side, what's coming under pressure is the macro tech developers. That's 5% down. Mazgaon Dock is seeing some profit booking, and a couple of these, real estate plays, as I said. So apart from Lodha, Sobha is also down, and IOC is the other one which is down in the trading session. But let me take it across to Sharad now, who's joining in to tell us the cover on the last read. Sharad, you were talking about, some of the companies earlier like Lux Industries, which were likely to see a big, HNI investor coming in. That's finally happened now with Mr. Mukul Agarwal increasing stake. But which is the other company on your radar today?
Well, yes, in focus is HG Infra Engineering, and what we are gathering from the dealers is this buying is coming from domestic institution, and it's likely that a domestic PMS portfolio management services has been adding positions. Now, interestingly, the volumes have also picked up, and the key DIs invested in the company include the names such as Nippon India Mutual Fund and also HSBC Mutual Fund. Now, there are important triggers also for the stock which should be in focus. Firstly, is that management has guided an order inflow of almost 1,200 crore rupees for FY25 as compared to only 4,500 crores in last fiscal year. Also, the company is expanding into railways in segments such as high-speed corridor, freight, and station upgrade as well. And lastly, the company recently has a 1,300 crore order book coming in under the solar scheme of Kusum as well.
Right, let's welcome on board Sudeep Bandyopadhyay too and find out what he's making of the market right now. Sudeep, hi, afternoon. We're at least mesmerized by the move in IT. Did you anticipate such a strong reaction to a largely inline set of numbers from TCS?
Well, I think the reaction definitely is beyond expectation. But Aisha, I think the numbers have been pretty good. It's of course, there were expectations being built, but I think it's better than that. Every segment in which they operate, the performance has been better. BFSI, particularly where they have been suffering for a very long time, I think finally they have turned it around. The other interesting thing which I found in the management commentary is that the AI portion, it has scaled up to 1.5 billion from about 900 million. I think that's quite interesting because that's the way forward. So that these small things which in isolation may look small, but in totality, I think it does create the picture of a very fast growing opportunity going forward. So yes, under the circumstances, the market is giving it a big thumbs up. And TCS being the largest, I think every other IT stock is also getting influenced by the performance of TCS, and expectations are building around better performance from most of the IT companies.
That's a word coming in on TCS and a lot of other IT companies, but Oil India is in focus. As we were talking about it earlier, the stock was up almost 5-6%. Now it's shot up to a 12 to 13% gain. Let me take it across to Janay, who's joining us with the commentary coming in from Morgan Stanley on this one.
Well, yes, so Oil India will be in focus as Morgan Stanley has maintained its overweight rating and hiked its target price from rupees 497 to 663, which is their highest ever target price. Now, if you look at some of the factors behind this, then this is gas production, which is being seen doubling and tripling from one of the largest and profitable fuel refineries in Asia. Second is 38 years of hydrocarbon reserve life monetization. And third is 14% CAGR of companies' operating cash flow. Now, apart from this, Morgan Stanley has also highlighted some of the other standout factors, which includes 20% increase in gas ASP over the years, and they also believe that the new well which is being drilled will extend further company's growth. Now, Morgan Stanley believes all of this has happened and still the company is trading at a single-digit multiple. Apart from this, Morgan Stanley believes that the dividend distribution by the company and earnings are set to double by 2029, and that is why we are seeing a hike in the target price.
Okay, thanks Janay for that. But in the meantime, there's a perk up on Zomato as well. Remember that too had got a thumbs up from brokerages this morning. Not a big change, but UBS had upgraded the target price to 260 on that one. That one too has seen a large deal in the last few minutes. And the other one is Indigo. My colleague Somit was pointing out how the delays coming in from Boeing is going to be good news for Indigo, because it's the likes of Air India and SpiceJet which have orders pending with Boeing, while Indigo has orders pending with Airbus, which means there will be lesser competition coming in for Indigo. So that stock is in focus as well. Overall, Sudeep, any thoughts on these urban discretionary names? And I'm talking about the travel and tourism industry, some of these Indigo kind of names, or hotel industry.
Well, I think this entire space is good. Of course, I mean, one has to look at the valuation. The airline industry, particularly Indigo, has been doing phenomenally well. And the way the orders for the aircrafts, as you just outlined, obviously that's advantage Indigo once again. But the valuation also is rich. So I don't think I will recommend a buy in Interglobe Aviation at this level. But I think it's in a good wicket as things stand today. As far as the hospitality sector is concerned, it is again it's a great space now, and things are looking really good. But if I have to pick up, few stocks from this entire, this travel tourism theme, I will probably go to one of the technology companies and some of the other hotel companies. So as far as hotel companies are concerned, for a long-term investor, Indian Hotel and East India Hotel is good. The valuations are not cheap, but for a long-term investor with about 3 to 5 year horizon, I think these are good buys. As far as technology space of travel tourism, I think RateGain Technologies as well as Coforge can definitely be looked at on the back of the excitement in travel and tourism.
Okay, let's get in some BTST trades as well on that note. Kunal, a very strong close to the week. Any BTST ideas?
Voltas is the first stock which I would suggest as a buy. The stock closing almost near to its swing breakout levels, just around the 1485 to 1500 plus levels is the swing breakout. So I would suggest a buy with a target of 1570, stop loss at 1490. And the second would be a buy on Coforge. That stock today is formed an inverted head and shoulder pattern. So if it closes just around the 6000 mark, this could be a completion of this inverted head and shoulder pattern for the stock. Expecting a 300, 350 point up move for Coforge, 6350 as target, and stop us at 5750.
Right, that's Coforge from Kunal. Naresh, what's on your BTST list?
So first would be a buy on Reliance Industries, very close to a new all-time high here. Stop loss at 3190, target price of 32.15. Second would be a buy on Crompton Consumer. The stock has hit a new 52-week high here as well. Stop loss at 432, target price of 445.
Naresh, do a chart check on a couple of these names. Manappuram, which is up 5% right now, and on the losing side, ABB. Of course, it had got a downgrade as well this morning, but that stock is slightly under pressure.
So Manappuram is a very interesting long-term chart. The stock pre-COVID had made a top around 190.95. Then in 2021, the stock made a top around 220.25. Today, the stock has come back to 220.25 levels. And that top in 2021 was hit a couple of times. So it's a 3 to 4 year breakout, as well as finally after 5 years, the stock is again coming back into reckoning and making a new all-time high. So out here, it's a buy at current levels, add more on dips, structurally setting up for a move to 260, 300. So looks promising. ABB on the other end is something which has gone up one way over the last, say, roughly 6 months, stock from 4,500 to 9,000. Giving first indications of a topping out with those 3-4 attempts around that 9,000 mark, not seeing a follow-up. So could slowly and steadily correct towards the 7,500 to 7,000 mark.
Right, that's the take coming in on some of those, liquid names. Want to check in on what some of those shipping names are up to, because they are the ones which were actually holding out very well. Not quite the, case in point being Cochin Shipyard, but Mazgaon, GRSC, all of them have been holding out very well. Of course, today the news from the larger theme has been the fact that Adani has actually opened business at the Kerala port. That stock, of course, is just about marginally in the green right now. But from a long-term perspective, Sudeep, how big an opportunity could shipping per se be, and the entire infrastructure also around it?
I think, Aisha, there's absolutely no doubt in my mind that this shipping infrastructure and shipping definitely is a fantastic area to be in. It's one has to be there in for long term. It's not a overnight business, or you start something and you will start reaping benefits tomorrow. It takes a lot of time. Adani is in the right place, and their decision to start manufacturing ships is a good decision. They have the infrastructure, and they have we understand they have the requisite approvals as well. So it makes sense for them, considering the global scenario of the glut, or sorry, not the glut, the demand, huge demand, and the lack of facilities for delivering those ships. So India definitely will attract a lot of orders for ships. So apart from domestic, the international orders also will start pouring in. So it's a great place. Now, the only challenge as far as domestic companies are concerned, particularly the ones like infra companies like Mazgaon Dock, Garden Ridge, is that while they have order book full, they are doing good, their balance sheet is good. The problem is the valuation was a little too full. And, at these kind of valuations, recommending a buy is definitely not recommended. Some amount of profit booking, some amount of correction, if and when that happens, these stocks will be worth buying for long term.
Okay, we'll wait by and see that. But in the meantime, we're also keeping an eye on the sky because in Mumbai, we woke up to those heavy showers, and then there was the expectation that the next few days it's going to be heavy downpour. We did speak with IMD today to get a sense as to what's the reality on the ground and what we should expect for the next few days. Listen into what they told us.
Expecting more heavy rain tomorrow. That's why we have given orange alert tomorrow. And till morning 8:30, we have received the rainfall at Santa Cruz around 115 mm in 24 hours. And we are expecting the same rainfall intensity in next 24 hours. Forecast for next 4 days, Palghar, Thane, Raigad, Ratnagiri, most of the places we have given the orange alert as well as yellow alert. As on today, we were expecting around 1000 millimeter rain, and that much rainfall we have already got. And monsoon is progressing very nicely, and there is no deficit as on today for Mumbai.
Right, okay, that's the take coming in on what the forecast from the Met Department has been. But the fact that, the June deficit, Sudeep, has been clearly made up at least so far in July. Wanted to understand what's your stance on the staples and the FMCG plays?
Well, I've been positive for quite some time on this entire, rural consumption and consumption getting boost post the monsoon, and pretty much that's what is happening. We should hope and pray, continue to hope and pray that the spread of monsoon is good. We understand that deficit has got covered, and I'm sure it will get spread well over the country. Now, if that happens, I think the consumption sector will overall get a boost. We are also, must say that we are also expecting some kind of support from government in the budget for consumption. Now, if these things happen, A, monsoon is good, and B, some kind of support from government for consumption, I think we will see a fantastic season for FMCG staples and even consumer durables, including two-wheelers. So I think we need to be careful and selectively start picking up. ITC definitely on a peer comparison basis definitely looks very attractive on a valuation level. So does Dabur and also HUL at some level. So these can be picked up because both Dabur and HUL have a significant skew towards rural India, and they should do well if rural consumption picks up. On the two-wheeler side, I would say Hero MotoCorp, which has a significant rural semi-urban presence, should be looked at on the back of this. We should also look at some of these, TTK Prestige and other consumer durable names, which is, related to typical rural consumption.
Naresh, the two-wheeler pack aside, what about the FMCG trade? Because that didn't quite last long, barring that, I think, election week.
So we've seen structural moves in some of the names. So if you look at Dabur, the stock has again come back all the way to the previous all-time highs made in 2021. You have Marico, which has again come back to the all-time highs. So the structure is positive, but one needs to be cognizant of the fact that they've moved up almost 15-20% from the last 2 months. So in this case, it's a buy on dips. For example, Marico after that move to 660 came back to 600. So you want to be buying on dips, and going forward, HUL could be the one which you could buy on dips because that has made multiple tops around 2700 over the last 2 years. The next time around, maybe that could break. So on dips, it would be a buy on Hindustan Unilever going forward.
Right. In the meantime, all eyes are also going to be on important macro data, the June CPI and May IIP data for India as well, which are expected to be released shortly. Gaurav is waiting by to tell us what is expected.
Well, yes, India will release its inflation data soon, and when we talk about economists, now their penciling is to remain somewhere around 4.8% growth on a YOY basis for the month of June. What they're expecting is that we have already seen the inflation going to 4.75% in the month of May, which was actually a lowest point in the last 12 months, and now economists do not see any kind of sharp uptick coming up in this number. When we talk about core inflation, that is likely to remain at 3.1%, which is again at a lowest level, but the main concerns are still there when we talk about food inflation, and specifically when we talk about vegetable prices. Let's not forget that food inflation have been higher than 8% since November 2023, and now what they believe is that the increase in heat wave in the month of May and June, which was
was followed by delay in monsoon in some of the northern regions, could actually weigh in some pressure when we talk about vegetable inflation. When we talk about any kind of inflation easing, now experts expecting that inflation will ease somewhere after September only, because that time we may see fresh kharif crops coming in. Now when we talk about IIP data also, they are expecting this growth to remain somewhere around 5% on a YOY basis, and this would be fourth consecutive month where the growth will be somewhere around 5% if that comes true for the month of May. They also believe that the high frequency indicators suggest mixed trends for the month of May, but they do not see any kind of sharp downtick or any uptick in this data. So overall, we will be watching out on these data points. Definitely we also have budget coming in, but still let's see how these data points pans out for investors.
Okay, thanks Gaurav for that. We will watch out for the CPI and the IIP data. CPI was of course much lower for the United States, and that has put the entire rate cut discussion back to the fore, and that's the reason some of the IT stocks are penciling that in as well, that perhaps the spending will ease from the clients once the rate cut cycle begins, and all of that is auguring well for the IT stocks right now. That's the biggest talking point. The other one is Sterlite Tech, which is up almost 4 to 5%. There's a demerger that they're planning there as well of the global services business, so that stock is in focus on account of that. You also have Tejas Networks doing well, 4% higher. InfoEdge is also higher because remember, after 3 or 4 quarters of decline in terms of headcount, this time around TCS had a positive headcount number, and a sizable one at that. Almost 5,250 headcount is what they've added in a matter of 1 quarter, and that means that perhaps the IT hiring has bottomed out. Of course, means very good news for InfoEdge, because a large part of their billings comes from the recruitment business, which has IT as their mainstay. So that stock is up 3.5–4% as we speak. On the losing side, as I was pointing out, some of these real estate stocks coming under pressure. Naresh, Sobha, Lodha, what should one do? Buy the dips or just let it go?
So all these names which have moved up quite a bit are better off to be let go, because they've gone up 100%. And at the same time, there are other players which are knocking at resistances. So something like Rustomji, which is Keystone Realtors, has been making the same top around 740 odd levels for the last almost 4–5 months. Then there is a Suntech Realty, which is still at 2018 levels. There is a Colte Patil, which is still around the same prices where it was a year back. So time to shift from the names like Brigade, Sobha, Prestige, which have moved up a lot, to these names which have underperformed.
Okay, well, it's been quite the magical week. And next week onwards, we're going to be counting down to the budget, which is the week after on Tuesday. So let's hear out what market participants are expecting this time.
I think everybody, including SEBI, Reserve Bank, and the Finance Ministry, is worried about the options and futures volumes. And I won't be surprised if something in that comes which can dampen the volumes and the sentiments in the market. See, I think they have 1 lakh crore extra from the Reserve Bank. I don't think they move from the fiscal deficit target of 5.1. I think they are also committed to 4.5 fiscal deficit for next year. So I'll be very surprised if they make any changes as far as fiscal deficit is concerned. We could see some bit of reduction in taxation for the middle class. There could be some schemes for subsidy or something of that sort.
Realistic expectations on the real GDP growth translating into revenue growth, which will be reasonable. I think FRBM targets and some stiff targets to be set for FY26. For FY25, we are working with 5.8%. I hope this glide path to lower down sharply to around 5.1% in the next 1 year. Impetus on balance sheet expenditure of the government to accelerate infra spending. Middle class, if there was not to be too much of tinkering in direct taxes, that would alleviate a lot of pain, and some additional allowances on the personal income tax, the plus rationalization of GST on a few items.
I think there are 2–3 ways to think about it. Firstly, from a government's ability to do things perspective, I think they're in a very comfortable position. So to that extent, if you look at the last 10 years, there has been a huge focus on infrastructure, on like anything to do with public capex. So that focus, I think, will continue. I think there is room to do a lot on, say rural land and consumption. So I think there is a lot of room to do on this year, for example, given where the government's finances are. So things look pretty comfortable from that side.
Okay, so those are the pre-budget expectations coming in from some of the market participants. We are ending at 24,500 thereabouts. So it's not that we could reach the 24,600 level, but you can't complain much with the kind of rally we've had in this week itself, especially in the IT names. The mid-cap index is ending a bit in the red today. So clearly broader markets giving up a bit, but not the frontline index. There is a bit of pressure as far as some of the broader market names are concerned. But Kunal, any positions that you would recommend people to carry next week, whether at index, bank, Nifty level or individual stocks?
Yeah, I think for the index, for the Nifty, carrying forward long positions could probably be a good bet. But for the bank Nifty, I think trimming out long positions it could also be a decent strategy, because we've seen weakness coming back into the large cap private sector banking names in HDFC Bank. In fact, in the last 1 hour or so, HDFC Bank has fallen by, I think, 1.5 to 2%, and that's led to the bank Nifty slowly and gradually lose the 250 point advantage for itself and then close almost flattish for itself. So I believe that the banking stocks, especially the private sector banking names, are adding a lot of weight for the banking index. So this index may underperform, but then when you have moves like what we saw for the IT index and individual move for individual sectors, that would probably keep the Nifty traders a lot more on the positive side. So maintain long positions on the index, especially on the Nifty.
Okay, and on that note, we'll thank all of our experts for taking the time out and joining in. Kunal, Naresh, Sudeep, and I'll hand it over to Vinny to walk us through the closing trades.
So absolutely, it's been an interesting week overall, we could say as well. And Nifty for today will be closing about the 24,500 mark. That was the market touch for the first time ever. 24,498. So just around the 24,500. Let's wait for it to settle down. But around that mark for the first time is what the Nifty will be closing at. And mainly, obviously, for the week, we're seeing good moves coming in from some of these FMCG names. ONGC, ITC were in the movers for the week. Now, overall, when you're looking at it specifically for today, what was exciting was the IT pack. Nifty IT, the top sectoral gainer, more than 4% uptick that we saw coming in for Nifty IT, TCS, Infosys, LTI, Mindtree. Take any of these IT companies, even the mid-cap names like a HCL Tech or a Birlasoft, all of them were buzzing in trade. And Coforge, look at it, all of them closing with gains of more than 7-8% that we're seeing in terms of the gains coming in for these stocks. A strong up move that we're seeing in the Nifty IT. Today we also had Z, which was in focus as well, on the back that they will be meeting on 16th of July for fundraising. On the back of that, Z Entertainment is also something that was perked up in trade today. From the overall media side, Nifty Media was among the best performing sector today. And what we saw coming in also that we had PVR Inox, which also managed to see some bit of a gain of almost 1%, closing with gains of almost 1% as of now is PVR Inox. Let's look at what the broader markets did and shifting focus there. We had the mid cap that was a bit subdued today. So mid and small cap today was underperforming the benchmark indices, so not much of an excitement there. But overall, what we're seeing coming in is that for the week, when you look at it, the Nifty small cap hit a record high this week as well. Let's not forget that for the week, and advancing for the 6th consecutive week. Nifty also advancing for the 6th consecutive week. This is the longest buying streak that we've seen this year for the Nifty 50 as well. So yes, Nifty IT also among the 4-month high levels is what we're keeping an eye out on. While today we did have some bit of a subduedness that came in from Nifty Realty. So Brigade Enterprises, Lodha, all of them were a bit marred in trade. But that's how we'll be closing the week. And when you look at the Nifty 50, settling at 24,511 for the end of the week. First time about the 24,500 mark. And Sensex 2 closing about the 80,500 mark.